this intersection between crypto and institutional risk standards has been getting closer and closer together. And with the development of new regulation and more institutions coming to play in the space, risk management, insurance is becoming, a front and center topic of conversation and is still developing and has a long way to go. So, hopefully people are able to listen to us and get a bit more insight as to where the industry stands today, some of the solutions that are available, and what maybe they should think about in terms of a roadmap, or as they start to think about how they should manage risk and build for a sustainable future in the industry.
Welcome, everyone, to another episode of the Ship Safely podcast. I'm Sebastian, your host, and today we're joined by two guests from AON, two legends in the space. I've known them for quite some time now. I'm super excited to have them on. Glenn Morgan is the head of digital assets at AON, and Alex Krasnow, he leads AON's DeFi practice now. It's amazing. Glenn has been building risk infrastructure for crypto since, some of you guys might have been in middle school. I'm just kidding. So he's been really early days, right? Like helping hedge funds, miners, and exchanges first, right? Before DeFi even existed, helping them even understand what insurance means in this space. I think in the early days, people were still asking you, Glenn, how do we insure the price of Bitcoin, right? And then, Alex brings a really deep focus on decentralized finance, advising protocols and clients across the on-chain frontier. Together, they're helping build AON's basically crypto business, right? Like the Web3 business. They're reimagining how risks get priced and transferred in this whole Web3 space, from cold storage, miners, to DeFi vaults and stablecoin treasuries. Alex, Glenn, it's great to have you.
Yeah, thanks, Sebi. It's great to be here. It's a long time coming, so I'm glad we got to work it out.
Absolutely. Really appreciate the opportunity.
Awesome. Yeah, no, it's super exciting. To kick things off, Glenn, what do you hope people will take away from this episode, and why should they stick around and listen?
Yeah, thanks, Seb. I think the big thing is that, we've been in the industry for a long time, and, this intersection between crypto and institutional risk standards has been getting closer and closer together. And with the development of new regulation and more institutions coming to play in the space, risk management, insurance is becoming, a front and center topic of conversation and is still developing and has a long way to go. So, hopefully people are able to listen to us and get a bit more insight as to where the industry stands today, some of the solutions that are available, and, what maybe they should think about in terms of a roadmap, or as they start to think about how they should manage risk and build for a sustainable future in the industry.
And that's, taking it from 1 to 1 million, right? Like just basically scaling up, becoming institutional grade. Awesome. So I've given a very brief intro of each of you. So first off, I'd like to ask each of you to maybe give a 1-minute intro of yourselves and how you got here. Like what's your background? How did you get into insurance and Web3? Glenn, would you like to start?
Yeah, for sure. So I've always worked in the risk management industry, on the broking side. I was, in working in private equity and M&A back in 2017, and it was something that I always had an interest in Bitcoin. very early days, just because it's citing internet money, didn't know a lot about it. There's hard to find information, but um, something that I spent a lot of time on personally outside of work. And then, around 2017, ICO era, one of Bitcoin's, first big public price run up, we started to get opportunities come across of more of the investment industry getting interested in crypto and spinning up businesses around it. So I saw an avenue for a niche, and pretty much haven't looked back since. I started at AON in 2021, and have been here. I think the reason, the appeal of it, is just because, since it is such a nascent industry, and there are lots of risks that don't fit neatly into products that have traditionally existed in the insurance industry. I saw an area where I could see you know a direct influence of my decisions and the work that we do here to be able to influence the industry in a positive way.
Awesome. How about you, Alex?
Yeah, absolutely. So I joined the insurance industry in 2021, immediately after graduating college. You began as a salesperson, eager to close any deal that you could find, and quickly saw that there was a major gap from a digital asset standpoint between what the industry wants and needs, and what the carriers are able to offer, and what the brokers are able to educate them on. So one of my first crypto clients was actually a metaverse company. I thought that was going to be the frontier of crypto and insurance, and I'm still bullish. I'm still bullish. It's not over yet. So ebbs and flows, but we'll see how that goes. And I ended up joining AON just under 2 months ago to lead our DeFi insurance initiatives. We see insurance as a means of maturing an industry from a risk control standpoint. So I've evolved from the metaverse to maybe a more meaningful sector today in DeFi, and we're really excited to see how we can support and move an industry as a whole forward.
Yeah, that's music to my ears. For those unfamiliar with what exactly AON is doing in crypto, can you give us a bit of a hint? Who are you working with? What problems are they trying to solve?
Yeah, for sure. Yeah. So we work with anybody from pre-seed startups all the way through the largest institutions in the space, custodians, exchanges, miners, any other public companies. And what we act as a risk advisor, or a broker, to help them, leverage risk transfer, risk retention strategies to, protect their balance sheet and be able to stick around for the long haul. Those products are anything from the top line of directors and officers liability down through crime and custody of hot and cold wallets. We do a lot of business with our miners. They have large physical risk exposures in their data centers and the equipment that they use, the construction, the build outs. So that's large property exposures. We also have a lot of the larger cast of characters that are use captive insurance companies to be able to fill holes that maybe the insurance industry has not met, leverage tax strategies, or even use crypto as collateral assets to be able to expand the amount of risk they're able to transfer through those. So it's a very broad remit of lots of different products. And then I also help AON explore anything that we're doing natively as a business related to digital assets. So I think that the direct experience alongside of the advisory gives us a very strong platform to be able to, help businesses with all things risks, and advise them on, what the next phase is in order to level up and scale their business.
AON is doing a lot in crypto. One thing I want to, maybe double click on. Alex mentioned that, as far as I understood, your first client was a metaverse client, right? And I guess, what I wanted to double click on and explore for further was like, what what made you think, okay, that's gonna be like not necessarily metaverse, but like in I guess that's what drew you in the Web3 space and digital assets, right? And what exactly, made you think that way, and how did that shape, what you're building at AON today?
It's a great question. I'd say, in general, in insurance and not, we fear the unknown. And when an insurance carrier initially looks at a metaverse platform or a metaverse infrastructure, there's a lot of fear in, what could go wrong. Um, with metaverse, with DeFi, with anything in between, when we have the ability to look under the hood and really get an understanding of the risk controls in place and what companies are doing. And then we're able to educate insurance carriers to get to a level to offer not only insurance, but cost effective insurance that truly covers the liabilities that they're concerned about. That was always what really interested in me. So at the time, it was a metaverse platform. Of course, we've done a lot with hot cold storage, with staking, and now with vaults. And so I think it's the same theme, and we're emerging and evolving as the industry needs evolve, trying to stay on top of those as much as we can.
And to ask a follow-up question to what you just said, but posing it to Glenn, as you've supported everything that Alex just mentioned, like hot cold storage insurance, even in kind BTC and ETH policies, and you've basically covered risks from slashing now to vaults, DeFi. What's the hardest crypto native risk class that was the hardest to wrap around, traditional insurance and properly define, and why?
That's a great question. I think that, from a risk standpoint, it's not just about the individual risk challenge, it's about the business as well. So a lot of what we do in crypto, and whether it's insurance or finance or technology, is all comes back to education. And for, the longest time, crypto has punched outside of its weight class when it comes to headline risk. Anything that happens in crypto, even if it's relatively small or insignificant, it can easily find its way into the news cycle. So I think, one of the things as being an advisor and advocate of the industry is being able to translate what a business is trying to do appropriately to the underwriters, to make sure that they actually understand the risk, as opposed to all the noise that goes on around a business. So, when you look at uh, what underwriters have done in this space and the evolution, how it's come along, we look back to 2017 and 2020. A lot of the conversation with the underwriters was, even when you bring them a good pristine risk, and when I say pristine, I just mean, they're doing all the right things, like institutions have done, you still might get a response, whether it's your cyber and your tech, or it's your D&O, or it's something as simple as employment practices liability. They would just say, we don't do crypto. And, crypto is such a broad cast, there's so many different avenues of business. So I think that rather than being a specific risk, obviously there's challenges, there's to be able to educate the industry and to build staking risk products. There's challenges with, the DeFi and on-chain risks with smart contracts, but it's always kind of like the same evolution. It's helping people understand the people, the controls, the strategy, and operations all around the risk. What actually ends up being the hardest is when work with businesses that have a bit of a challenging reputation or narrative around them, whether it's right or wrong. They're fighting against what everyone's writing about them in the press, because the first thing an underwriter does when they get a submission is they, you know, type it into Google, see what other people are writing about it. And that may, right or wrong, that develops their perspective before they've even dug into the materials that you've sent them.
Yeah, yeah, 100%. Like as you were speaking about early days, I remember I the first project I was working on when I got into Web3 was a peer-to-peer sort of insurance, well, between quotes, like protocol. And the goal was to ensure the risk of DeFi, right? And when you would talk to someone in traditional insurance, they would laugh you out of the room. Like, what are you this is just so ridiculous. I remember I was at this insurance summit in Munich and it was just hilarious, that we would try to do that. But, I want to ask, how things are now. So like on the DeFi side, what do you think is still the biggest misconception that protocols or even DAOs might have when they approach you to buy insurance?
I think as we have conversations with the curators, the asset managers, the hedge funds, the protocols themselves, either allocating funds into vaults or curating the vaults themselves, the biggest misconception I've come across is they see us as potentially just having a transactional relationship. You give us your information, we go get insurance policy in place, and that's the end of the day. In an emerging industry like DeFi, the insurance is the byproduct of what we do beforehand. It's the supporting with the risk controls, with the security vendors that could improve their risk profile and lower their premiums. When we look at the exploits that have occurred in the last several months, there are very specific lack of risk controls or maybe improper risk controls that led to certain losses. And a big part of what we're trying to do in supporting DeFi is giving that education as to what insurance carriers are looking at before we actually go to market, before we start getting those quotes, to improve their insurance buying process and experience, but also give our carriers an extra set of comfort that we are truly looking at their risks and not just throwing it their way and saying, hey, good luck, give us a policy.
Yes, 100%. You both have helped lead AON's first ever stablecoin premium payment. That's so exciting. Like, I just feel like
Yeah.
insurance in Web3 has come such a long way with that. What did it take to make that happen in such a large regulated company?
Yeah, so I think you touched on some of it. The AON is a risk management organization, whether it's health, wealth, human services, reinsurance, commercial risk. Risk management is at our core. And, beyond just being a risk management organization, we're a public company. And so whenever we set out to do anything, like this, there's risk involved and we have to do it very cautiously. We have to have alignment from our treasury of finance, our, controllership accounting, our legal, regulatory compliance, information security. So it's not just a, hey, let's push a button and do this today. I mean, if we wanted to be gimmicky about this and just do it for a headline, we could have leveraged a third party provider to facilitate these transactions for us. But I think this is a broader signal that, a company that's centered around risk can participate natively in the industry. That if we put our heads together and everyone understands that we're able to get comfortable building out our own infrastructure to be able to transact with our clients. And I think what we wanted people to be able to understand is that, we're not just while we are the largest, risk advisor for the digital asset industry, we're not just an advisor, we're somebody that sees the long-term benefits of this technology and where the ball is moving. And so, beyond just what we want to enable for our clients, it's also more about testing and learning for us as a business, because this is something that we see there's going to be material benefits and efficiencies that we can drive through other aspects of our business, not just for our customers. And so, with the relationships that we have and some of the, conversations we've have been ongoing for a long time, we felt like this was the right time to be able to do something that shows that we are on this growth path and we want to engage with others in the industry around these topics and to start to level up variety of solutions that will help move our business forward into the future.
100%. So, over the years, since I think as early as 2019, we've seen a lot of on-chain, again, insurance experiments, um, with products that mimic insurance and so on. What's your take on that? Does it have legs, or are there still like some fundamental or, regulatory limitations that need to be overcome?
Yeah, okay. So, in terms of the on-chain risk transfer protocols, absolutely there is utility in the services that it can offer. I think from a individual user experience, from a real retail side, the ease of entry is incredibly beneficial. I think they're able to hit niches that at certain points, regulated insurance is not able to hit. So I do want to kind of preface that there is absolutely going to be a use case for the on-chain risk transfer protocols, and I don't believe that the larger players who are very technically savvy and understand the liabilities, understand the technology, are going away anytime soon. As we look to institutional capital moving on chain, there is a certain expectation of standard when it comes to who is offering the insurance coverage, what their backing is, and what rules and regulations those entities are held to. And so, from a regulated AM Best rated insurer and comparing them to an on chain risk transfer protocol, there's different claims payment cap table standards that each are held to. So, I believe institutional facing firms are moving towards the regulated side, while the retail will absolutely have their interest in the on chain risk transfer protocols. And I do know that there are many on chain risk transfer protocols who are now looking to offer some level of regulated capacity for insurance. So I believe that they'll work in combination with each other. From a DeFi standpoint, we're already seeing a lot of these on-chain risk transfer protocols offering some type of protection for the DeFi vaults, which we're of course a big fan of. And when we cover DeFi vaults, we are not intending on ensuring the entirety of the market. We would like to offer, a tier system for the level of risk that, investors are accustomed and open to. We'll have our, regulated, rated insurance carrier offerings, kind of the tier one of the coverage. We'll have the on-chain risk transfers as the tier two. And then we'll have the 35% yield, no idea where it's coming from, relatively high risk investors that want to play ball, and all power to them to do that. So we're really just trying to bring optionality. And we have a lot of confidence in the fact that the products that we're going to be able to offer are going to be really interesting to a lot of the institutions coming into the space.
Yeah, yeah. Seen a lot of crazy stuff, definitely.
Yeah.
So, Glenn, you said that, like the hardest part of innovating in Web3 at a company like AON isn't the payment itself, but it's aligning, like legal, ops, treasury, compliance, everything. What did you learn about, internal security in the broad sense?
Yeah, I mean, I think I touched on some of it when I talked about what we had to do in our stablecoin pilot. Seb, you've probably heard me, over the years make some remarks about what I'm working on or how I'm having to navigate corporate challenges in order to enable us to do certain things. And again, that's about risk being at our core and making sure that we're doing things cautiously, but also our role as an advisor. Our role is to help others and to be able to manage their risks the same way we want to manage our own. So, it's definitely gotten better as the industry itself has gotten better, as things have started to be de-risked through regulation and counterparties are starting to grow up a little bit. But I think that it definitely has been a challenge over the years to fight the fight for the industry, to help people on the corporate side understand what we are trying to accomplish and what risks we're trying to help the industry with, and getting them comfortable in a way that we can do this, that's, not going to, it's not going to essentially fall apart, and the solutions that we're putting on the table work when they're supposed to and are here to stay. I think for, the internal security elements, I think a lot of what, we've gone through on the corporate side is something that a lot of people in the industry are learning about firsthand today. In the past, I think we spent a long time kind of going through the evolutions of Web3 and on-chain layer twos. What can we do next from a technology perspective? And it was a lot of the same people shopping around the same utilities that we've had for a number of years. But what everyone is trying to look forward to now is like, how do we scale our business? How do we get more people on chain? How do we get more people to use these products that are already working? And that means that you have to meet institutions with where they are, and the tested policies, practices, and procedures that have helped them scale to the magnitude that they are today. You don't get to the size of some of these massive players in the FI space without having these policies and procedures to protect your business, to ensure that it's around for the long haul. And now, as folks have started to grow up in the industry, they're facing similar challenges, that if we want to do this deal with this large company, we're going to have certain risk management policies, practices, and procedures. Insurance is part of that, but there's many other things, from a like risk control and ops security, cyber environments, that they need to address as well. And right or wrong, it's just part of growth. So whether they've been doing this since day one or they're doing it today, it's all kind of part of their calculated decision of, okay, how much do we need to worry about getting to the Series B and showing growth to our investors, versus investing in longevity that we're around in 4 to 5 years. Because if they spend their budget in the wrong place, they might not make it to that next round of investment. So it's kind of some of the growing pains that people face. But I think now it makes us a very interesting part of the conversation, as people start to worry about scale a lot more in this new environment, where they feel a little bit more like they have some breathing room on the regulatory front, on the public interest front, etc.
Yeah, yeah, 100%. It's and the industry is maturing, and this breathing room in the regulatory side is definitely helping. But like you said, we're still seeing a lot of issues in the security, you know, areas of this space. So how does Aon as a firm think about security in crypto, and what's your view on what protocols or custodians still tend to get wrong there?
Yeah, I think from our perspective, it's proactivity over reactivity. We're redundant in our risk control framework, but that's where I think this industry continues to evolve and move forward, and it's something at Aon that we feel we're second to none in being able to support those risk controls, and being able to advise our clients and our prospects before actually the insurance buying process. What are the insurance carriers looking for? How can you put yourself in the best position? And so that's everything. We see a lot of reactive solutions. We see a lot of, we're trying to recoup the funds. We've got the incident report or whatever it may be. While maybe we don't have an audited key management structure, maybe that we don't have our annual audits, maybe we don't have a real-time wallet monitoring system notifying us of malicious activity, maybe we don't have the circuit breakers in place, so on and so forth. So that, I think, is our big push. Is an effective risk management strategy is both proactive and reactive, and we can support our clients and our prospects ensuring that they're adequately structured on both
And
sides.
I'll tag on a little bit to that, Alex. I think, you know, Sebby, to your question, for everything that people are getting, that people are still getting wrong, I think there's a lot that people are getting right. And I think they have been getting it right for some time. When you look at the landscape of the crypto industry, good actors, bad actors, and everywhere in between, I think what we see from a loss perspective is that many of the people that are making the right decisions are often not seeing losses. People who are being proactive about their risk management strategy, about their insurance, about their risk controls, the diligence that they put into counterparty risk. Those are the firms that generally don't have these unexpected blowups. It still happens. We still have customers who have losses, and and they're very happy with us. When they've worked, we've advised them on products to buy, and those products actually work. There's no one who understands insurance better than someone who has gone through a claims process. That turns speculators to lifelong advocates for our industry. But I think that it's important to underscore that, like, for everything that people are getting wrong, and still, there might be lapses in controls, or maybe hesitancy to invest in certain risk transfer solutions. There's still a lot of players in the industry that are really doing things right and are really helping us turn the page into a more sustainable future.
Yeah, bullish on those.
For
I
sure.
like that you say there are a lot. My impression was there are not as many, but maybe nowadays it's getting like the numbers are getting higher in terms of
Well,
like
you stick around
companies.
long enough, and it does start to feel different. I'm sure, being on the security side, like, it definitely feels
Yeah,
different than it has in years past. So it's good
yeah,
to see.
yeah. Awesome. So, one more free-form question. What's, on the horizon, and, what are you guys most excited about testing and shipping next?
I will, I'll share. I'm going to keep this relatively high level, and I'm excited that we'll be able to come out with more information in the next few months. We are actively working on not only supporting the DeFi ecosystem from an insurance standpoint, but also supporting some consensus around risk controls that can help move the industry forward. Glenn mentioned a lot of the great actors, which there are plenty, have these strong risk controls in place. And I think the challenge that the industry as a whole faces is you can have great risk controls. If the partners that you must rely on do not, you don't have great risk controls. And so that's where I think we have an ability to evolve an entire industry. And we're really excited to do that. And more information on that will come out in the next few months.
Like when you just said that, in my mind, it was DeFi Legos, the concept of DeFi Legos, right? And then, there's also the concept of the weakest link in security, right? So in this space, it's the weakest Lego, right? You're as good as your weakest Lego.
That's right.
You are. You absolutely are.
Awesome. Super exciting. I'm thankful for you guys for sticking around for all these long form questions. And now we've gotten to the point of the podcast episode where we have the rapid fire closeout. So I'm going to kindly ask if you can answer in one question or even one word, if possible. Let's start with Alex. First question: what's one part of crypto insurance that you think people still fundamentally misunderstand?
Apologies, maybe more than one word, but we'll keep it as brief as possible. There's a stigma about insurance that carriers don't want to pay out claims, especially as it relates to medical insurance. So there's a little bit of a distrust. So maybe my one word would be distrust. Our carriers, these are relationships that they build. We are going to align on what would and would not relate to paying out a claim, and they are their value comes from, when there is a claim to be paid out, they pay out. So mistrust, I think, would be my one, misconception as it relates to, crypto insurance.
I've heard that a lot. So yeah. Second question, what's a risk management idea from traditional finance that you wish more crypto founders would know?
Reactivity, proactivity. I mentioned it earlier. It's what are we doing beforehand to put ourselves in the best position, and what's our plan when something goes wrong?
Yeah.
Proactivity and reactivity.
100%. Third question from our last guest, Adam from Startup Fun. He asked, what do you think will take to bring the next generation of startups on chain?
I think that probably abstraction is the key word here. If you can abstract away the technical aspects and know that you can still trust a product or technology, a counterparty, then it becomes less of a cumbersome business decision for you. I think that there's so much homework around doing things right now that, like, people are like, "Well, this is just, it's not that we couldn't do it. It's that, there might not be enough value with all of the extra work that we have to do. So make it easier for us, and we're happy to join you on chain."
Nice. That's a very good answer. And last but not least, what would you like to ask our next guest on the podcast?
Well, sticking with the risk and insurance theme, we heard a lot about quantum recently. We're seeing live, a new DeFi hack every couple months. For the next guest, I think we'd say, what is one risk in the industry, in crypto, that nobody is currently talking about?
The one. Great one. Awesome. And that wraps it up. Thanks a lot for being on, guys. Please let our listeners know where they can find you, maybe write you a message or learn more about what you guys are doing.
Yeah, absolutely. I think the easiest way to get in touch, we're institutional folks, so you can find us on LinkedIn. Not going to drop my Telegram here for the world to hit me up, but if you find us on LinkedIn, we'll get back to you, sort things out through the institutional channels.
Likewise, and I'll just add Twitter, X. I'm on at Alex Krasnow. My tweets are not very very frequent, but I'm trying to get better at that. So and always will read my messages there.
There you have it, folks. Hit them up on LinkedIn, and Alex is also on X. And ask for insurance. Tell them that Sebi sent you.
Thanks, Sebi. It's been a pleasure to be on.
Awesome. Thank you so much for coming on, guys. Have a great one.
Yeah, have a good one.